So NIO just announced that they're looking to raise $3.12 billion in a secondary stock offering as Chinese electric car makers are trying to raise more capital to try to compete with Tesla. Chinese EV stocks are up a ridiculous amount this year, and now the runs have started to cool off a bit. They're starting to reach a bottom point. Well, it's a great time for them to raise more money because when your stock is doing well, it's just a great time to raise money. We saw Li Auto announce last week they're doing a secondary stock offering to raise about $1.5 billion. On top of this, Xpeng announced the same thing. They're doing a secondary stock offering to raise $2 billion. So it's only right and it's about time that NIO is doing the same thing. And they just came out on Thursday, December 10th, that they will be doing a secondary stock offering to try and raise $3.12 billion. So as an investor with over $500,000 invested in the Chinese EV market, I thought I'd give you my take on exactly what is going on, how this secondary stock offering will affect NIO, and where I see NIO stock price going in the future. For those of you who are new here, my name is Michael. I'm a 21-year-old investor, entrepreneur, and full-time college student. In the past 30 days, I've made about $175,000 in one of the many investment accounts that I share with you in our private group on Patreon. So if you'd like to know more about what stocks I'm buying, what stocks I'm selling in my personal investment accounts, you want exclusive content that I don't share here on YouTube, and if you want pre-release access to the podcast that I have with my 80-year-old millionaire investor friend, well then make sure to join our group using the link down below. Anyways, let's talk about NIO, what's going on, why they're raising this money. So NIO just announced they're offering 60 million new American depository shares with an option to increase this to 69 million shares if demand among investors increases and it goes really well. NIO will price the share sale after the end of the day today on Friday, December 11th to see exactly what the share price should be of this offering, but currently NIO stock price is hovering around the $45 range. This secondary stock offering is a sign that NIO is looking to ramp up production and compete more with Tesla. NIO is currently the largest Chinese-based EV company, and Tesla is their major competitor in China. Companies like Xpeng and Li Auto are also big competitors as well for NIO, and they already raised billions of dollars earlier this week. So now with NIO, this money will be used to growing and expanding their vehicle lineup, making new vehicles, designing new vehicles. Also, it's going to be used for their autonomous vehicle platform, upgrading that, trying enhancing this as well. And finally, the money is also going to be used to help with battery production, make longer lasting batteries, and with their battery as a service model, building out more facilities so it's more accessible to Chinese consumers to use their battery swapping stations. In my opinion, this is a great move by NIO because right now, raising more money is just a smart thing to do when your stock price is already up significantly. When stock price is doing well, it means investors are confident about your company, they're feeling good about it, and it's just a good time to raise more money. By NIO announcing that they're raising more money, it may decrease their share price in the short term just because there's going to be another 60 to 70 million new shares that are going to dilute all the other shareholders right now. The way it works is when they do the secondary stock offering, this 60 to 70 million shares is essentially going to dilute everyone else's shares because now the same market cap, but just more shares. So essentially, the amount you own is less relative to how many shares are out there. But ultimately, right now, I think this is a good move by NIO. We'll have to wait and see what happens, what exactly they'll be using this new capital for. But long run, it should help them. Moving forward, I see this really helping NIO's stock price. Currently trading around $45 per share, I think it's definitely possible we could see their stock reach over $100, over $130 per share within the next couple of years, depending on how deliveries go, how NIO Day goes in January, and as long as they continue to outperform and keep delivering year over year growth. They need to deliver massive growth every single year to justify where their stock is currently at. But as long as they do that with this new capital, this should be able to help them move forward, do any new developments, any new projects that they've been working on, and it should help them meet investors' expectations moving forward. Anyways, I think NIO is a great buy. It's come down. It started to settle around that $40 to $45 range. I think it's a good time to get in, and we'll have to wait and see what happens. But anyways, that's what's going on with NIO. They're looking to raise $3.12 billion in a secondary stock offering. We don't know the exact price yet, but they'll be pricing these 60 million shares at. We'll have to wait until the end of the day today to see that. But I hope you enjoyed today's video. Don't forget to get 4 free stocks, each valued up to $1,600 when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you next time.